Welcome back to the Crypto Rainn channel. I'm your host, Jay Rainn. And 50 years ago, there were some financial tools called options that allowed for you to long and short stocks, both as a way to hedge your risk or to speculate. And that changed the world. But smart contracts and crypto have allowed another hedge against risk that might change financial instruments just as much. And Bumper Protocol is leading the way on this. Now, I've covered Bumper in depth in the past months, but today we get a quick update from Gareth Ward, the COO and co-founder of Bumper, to hear what the latest is. So let me welcome our guest on. Gareth, are you there?
Yeah. Thanks for having me, Rainn.
Yeah, really good to have you. I love Bumper Protocol, as my audience knows. When Jonathan was explaining to me, like when I read the white paper, I was like, wow, this is really big. But I sent it to somebody who's in the financial area that knows things even more than me. And I said, am I reading this right? And I think this is going to be mind blowing. And he got back to me just as excited as I was. So through some connections, I was able to meet Jonathan. And I've had him on twice for interviews, which is unusual that I asked the team to come on so much. But really, I like what you're doing, and I do think it's going to be groundbreaking. And I'm generally a pretty patient guy, but I've been pretty impatiently waiting for Bumper to come around. But I appreciate you joining us. There is a way that people can participate, and that I've participated in it, and maybe we can have Gareth explain to us how you can. It isn't normally, it isn't yet tradable on the market, but they've developed a way to allow us to participate that's highly rewarding. And so I know much of my audience has. So Gareth, I guess before we go any farther, some of my audience are very familiar with Bumper and some aren't. Could you explain it to those that maybe don't know what Bumper Protocol is?
Yeah. So really simply, it's a protocol that will allow a user to protect an unstable asset. So for example, ETH, which we're launching with, you can protect your value of ETH. So if you think, what's ETH sitting at now? Well, around about 3,000. So let's say you feel it's going to go down a bit further. You protect it now at 3,000 and you want ETH. And then if it drops down, you protect it at a certain level, like 90%, for example. If it drops down below that 2,700 and you have the opportunity to kind of cash out, you'll walk away with 2,700, even though it may drop down to like 2,300 or whatever. So you pay a premium for that. It's dynamic. It's constantly changing, but it basically is your policy that protects you. And so, if the nice thing about it, and this is kind of the key aspect, is that fundamentally the reason why you're wanting to protect that asset is because you're long on that asset. You fundamentally believe in ETH, for example, in this case, and you don't want to lose it. I know I've certainly been in, like a lot of people, you kind of make a decision to sell out because you think it's that point in the market, it's kind of a bit more toppy. You sell out, and or you use a stop loss in case it's getting a bit ropey, and then all of a sudden you're out of it. And an hour later it bounces back and it just goes to the moon, and you've missed it. And it's absolutely the most frustrating thing, especially if you've been a believer and you've been kind of hodling for some time, to then kind of in a moment of kind of weakness or concern, maybe you had bills to pay you're a bit worried about, and you didn't want to kind of take that chance because it's very volatile. You're now out of the game, and you're no longer in that asset that you actually fundamentally have a long position on. So what this allows you to do is to protect from that downside from those events, and still be part of that upswing, which is absolutely critical. So to do that, what we were originally trying to solve for was an issue of slippage in an original kind of idea, and that had to do with collateralized debt positions. What we actually ended up kind of creating was Bumper, and what we kind of utilized was the DeFi, the concept of pooling. So you're pooling essentially risk buyers, your makers, who provide stable coin to support the protocol, and your takers who take out policies to protect their assets. And so you have one side of the pool as an unstable asset like ETH, and the other side is a stable asset like USDC. And if you just look at it, think of it more as a kind of, ledger on steroids, which blockchain is. But the protocol is looking at the positions of both sides. People are constantly coming in and taking out on both sides of the protocol. So the protocol has a whole bunch of ratios that it's constantly monitoring, and that's what keeps it in balance. And it knows that it can support the policyholders, the takers at any point. And it's using incentive mechanisms inherent in the protocol to incentivize those makers, the buyers of risk, essentially, that are providing that comfort for the policyholders to get their protection. And so it's quite an interesting balancing act. It's certainly kind of, the white paper's well over 100 plus, 200 plus pages now, which no one's seen yet, but it's going to be quite the beast. And it's a very difficult protocol to build. It's definitely taken longer and a lot more complicated than we initially anticipated, but we are kind of plowing through.
Yeah, what I think about, what I love about it is, so I'm an investor. I've been investing in real estate first for 20 years, and then crypto for just 4 years. But I remember last bull market in 2017, we had this parabolic move, and I think about that because there tends to be parabolic moves about every 4 years, and I'm looking forward to another one that I think is coming. Now, the downside of parabolic move is you don't know where the top is, and so what you normally have to do is you have to sell and take funds off the table, and sell, and you end up leaving a lot of money on the table because you don't know where the top is. So I'm really looking forward to Bumper, because as Bumper gets ETH figured out, then it can move to Bitcoin and maybe even some other assets. Because imagine this, like, say I put everything into Ethereum and I'm trying to time the top, but I don't know where the top is. Now, you'll never time the top exactly, but the way I think about it is, if you're taking the ride up, what's cool is it's going up in value. You can re-protect it at, say, the 90% level. So say ETH goes to 5,000. Great, you're like, okay, I don't know if this is the top or not, and you can protect it at 5,000, which guarantees you 4,500 or below. If it drops down, you're protected at 90% of that, which is 4,500. And then it goes up to 6,000, then it goes up to 8,000. You're like, man, I'm so glad I didn't sell and take a bunch of profits out at 5,000, because now it's at 8,000. And you were protected here, but then you can move up, say, your insurance level to the 8,000 mark and get 90% protected at that. And you can choose 85% or 90% or 95% protection level. You just pay a little bit higher premium for the higher insurance levels, right?
Yeah,
essentially.
yeah, exactly. And it's like this kind of thing, and that's a really good point. That people, it's kind of like, if you were to study economics, it's kind of one of those intro to economics 101, the concept of opportunity cost, and it's the cost of the opportunity forgone. So in that example, you're paying a premium to protect, and yes, it could go down, but where you've really saved money is in not making the decision to sell out at 5,000, and you've been able to capture the $3,000 or $4,000 increase that went up to 8 or 9, and that's only cost you a very small amount to kind of make that decision. And so it's not always the other way around, where you're paying a certain amount to cover the downside of what you could lose. It's also you're covering the potential of what you could gain, and you're ensuring that for your kind of, I keep talking about this, you're not just protecting from downside events, you're protecting your ambition.
Yes, you're allowing your upside.
Yeah,
yes,
absolutely.
Exactly.
Yeah.
And that's what clicked with me on this, because so I've used, like, options or even like stop losses to protect positions before. And here's what frequently happens in crypto. And let's just use Ethereum for this case, because it's the first one that you're going to be on. So say I'm trying to explore as it goes parabolic and it's going up, but I don't know when it's going to drop down. So I use a stop loss. And we hit 5,000, so I move my stop loss to 4,500. In crypto, often there's these, they call them scam wicks down, but it's basically like some people do freak out the market and they sell, bringing the price down right before it then goes up. And so what happens is you get stopped out, and then all of a sudden it swings up to like 8,000. And so a stop loss doesn't help you in that situation. It really is an inefficient tool for something as volatile as crypto. Whereas what you're developing is a highly efficient tool, because you don't, when it goes down below that, you don't have to cash it out. You can just let it ride, and you can cash it out later. That way, if it gets down and then it goes back up, you're like, oh, cool, you didn't get stopped out. You're still in your position, and you're able to explore that upside without taking on huge amounts of risk. And so I'm really excited what you're developing. I'm like, come on, like come out for Ethereum, and then maybe wrap Bitcoin, and then a bunch of other altcoins, because I'm heavier on the alts because they're more volatile, which I like during an appreciating market. Terrible during a depreciating market, like a bear market, but during a bull run, as the tide is rising, they're amazing to be in.
Yeah,
versus,
exactly.
say, just Bitcoin.
Yeah, I'm a total alt boy to the point that I'm kind of an idiot with it. I'm very much like, you need to, when I talk to people, it'd be like, manage your risk, spread that risk, have lots in cash, have in your higher kind of your top tiers, and then whenever you go into a more volatile asset, you decrease your exposure to it. But I actually, in practice, kind of a very much the opposite case, because I just kind of get a bit too excited by alts about the new tech that's coming through, and also, at the end of the day, when they do swing and move, they just move at a factor so much higher than your kind of top tiers, and so if you're really clever and you play the kind of the flow of money game, and you watch and you just follow the tiers, so you go into Bitcoin and you move into the top tier 2 and tier 3, that's how you play, and then you move back into Bitcoin for the next surge, and then pull out to cash, wait for it all dump, and then start the cycle again. It can be a lovely game, but I know for myself, I don't have the time for it. It's very active management, and I think, I personally, I know, a lot of us are very much, we're just kind of hodlers that become very attached to things, and we do have that long thesis on particular coins. So Bumper was kind of a natural evolution of how it's kind of a lifestyle choice, so that you can just take that protection out and sleep at night and not have to worry, and just know that you'll be in it when you need to at the moment.
Like the active trading, for those that want to try it, they're welcome to try it. I've tried that before. It actually makes it hard to sleep. You don't want to go to sleep because you don't want to miss things. You don't want to pull out all your positions. So I tend to be a swing trader. I hold for longer periods. Yeah. And I just buy when it's as simple as this. During a bull run, for about 18 months, I tend to buy projects at near the bottom of what I think the bear market is, which is hard to tell. So I ended up buying early last bear market, and then watching things go down, buying some more, watching it go down some more because you don't know where the bottom is, then buying some more, but then just holding it. And I held it, and it's done amazingly well with that thesis. And then, during the last 12 months, I've essentially looked for alts that are out of cycle or out of focus that have really good potential, and I buy them and I hold them as they go up. And so I think we probably have another 3 to 6 months of this bull market to go really strong, and at some point it'll go parabolic. At which point, if Bumper is not available, my risk hedging strategy is to then just sell some out to fiat, and take some out, like sell 10% here, sell 10% here, sell 10%. If Bumper is available, especially if it's on more things than just ETH, then it will be actually just roll it all into that asset and then just essentially insure it, so that when it goes up, and then when it takes that big swing down, I can just then cash out and be good. Evaluate whether I think it's going to take one more run up, which if it's a big enough swing down, like a 50 or 60% swing down, that's probably the mark that it's the end. But if I've kind of insured along the way, I'm pretty protected when that swing happens. It just allows me to harvest more gains during the bull run. Because I've been waiting for this bull run. Once I really figured out the cycles, or really saw the 4-year pattern that Bitcoin tends to follow, been waiting for it for 3 years, so I'm like, this is game time, and I'm very excited to be here and, trying to figure out with my audience the best ways to maximize this game time, right? And so as Bumper comes out, I'm excited. There is a way that actually the audience can participate in it, even though it's not tradable on the market yet. There actually is a heavily subsidized discount, which got me really excited. I put a bunch of funds in myself. Gareth, would you explain to the audience kind of what that's about and what this discount is about?
Yeah. So we have this liquidity provision program. So you can put in funds that kicked off July 14, ending on October 14. So you put in USDC, and you'll then farm an amount of bump tokens until the end, and you also have the opportunity to buy upwards of 20% of whatever you put in. So if you put in $1,000, you can take $200 of that and just buy bump tokens at that what we call a kind of private sale price. That price is linked to the total deposits into the program. So as the deposits go up, the price is going up. So you're always capturing the latest price, and then the next person who comes in will pay a slightly higher price. So we've kind of done it. It's pretty unique. I don't think there are any that have kind of done it that way. And we felt what that linked is to, the deposits into the actual protocol. And then after that, we'll move into a kind of a farming 2.0 program, which will look slightly different as well to help keep you in there and still have opportunity to capture bump rewards. But essentially what we're then going to move into is at the end of the LP program, we go into a pre-sale at the same time as the kind of farming 2.0. And that will be a week-long period where you can essentially buy the tokens. Now it's unfettered, so you're not limited to 20%. So for those existing LPs, they will be able to now swap up to the entire amount that they first put in and buy at the pre-sale price. That pre-sale will be determined based on whatever the last price in the actual LP program was, plus a premium. And then a bit later, maybe a month or 6 weeks later, we go to a public sale. And again, that will have a premium put on top from the pre-sale price. So there'll be a really good opportunity to buy a pre-sale. There'll be a higher rate at public sale. If you're an existing LP, you'll easily be able to swap your money that you've already got locked in. If you're new, you can just come in and buy at pre-sale. If you're not interested in any of that, you can still come in and just deposit and just farm bump. So there are a few options there, and obviously if you're not interested in either, you can just withdraw, and that's fine. You've got your share that you want, and you're happy, and you move your funds out. So we're trying to appease all different kind of actors in the space, and we think they'll be quite excited by that. We then actually will be moving to that public sale fairly promptly, and soon after, within a couple of weeks, we'll go to IDOs. So it will all be tradable. At the moment, it's all locked. but it will be tradable at that point. So there's not huge amount of weight left. You'll definitely be trading it by the end of the year, and we think it'll capture some real interest. And I think realistically, although obviously we are ramping up our marketing profile and spend and whatnot over the next few weeks leading up to the pre-sale. So more and more people will be hearing about Bumper all around. So really, this is a really good opportunity to get it. And something that people probably, I don't think has quite got out there enough is that to use the protocol, whether you're a taker or a maker, or you're looking for protection or you're here to supply stablecoin to support and you get lots of rewards and all kinds of incentives there, that you need bump tokens. You need to lock that into the protocol, and that will be based on how much you're trying to protect. So you've got to get your bump tokens regardless. You will need them to use the protocol. And so it is really the cheapest opportunity for you to get bump tokens right now. And later on, the need for those tokens, and this is what we've carefully constructed, the importance of the token. It plays a number of roles in the protocol, but one of which is that you need it to actually access the protocol and utilize it. So that will create a demand on the token for later on, which is always great for investors. But at the same time, it's really strong. A strong price is also very good for the protocol, because we use that bump token as an incentive mechanism for both makers and takers. Whenever we need to rebalance, we do daily distributions, a bit like Compound, that will go to either party, and we'll emphasize which party we need more of at any one point. So there are a few really good uses, and there are a few other things later on we'll bring in later iterations to do with kind of loyalty levels and stuff.
Question, Gareth. So now those in the audience that want to participate, they go to bumper.fi, right?
Yeah.
And you have to have a MetaMask wallet, and you have to have USDC on your MetaMask wallet. If you don't have one of those, you just go, or you in YouTube search, look for walk through instructions on how to do that, and then you fund it with USDC. Then you go to bumper.finance or bumper.fi, and you connect your wallet. Now, I know when I went through, there were some extra steps that confused me, and somehow I kind of bumbled my way through it and didn't run into any errors, or if I did, I kind of got through. I know some of my audience ran into some errors. This was a month or so ago, and when it first launched, has that kind of been worked out for those that ran into that? I mean, I got past it and just, I don't know what I'm doing. People think because I have a YouTube channel I have amazingly strong technical abilities. I have amazingly strong economic abilities. Technical abilities, not so much. I did go to business school, so I had some finance classes and stuff, but as far as running into technical problems, I don't know what I'm doing, but I did blunder through it, right? So do you know if that's solved altogether, or is there an extra step, or if they run into problems? I just told my audience to go to Bumper's Telegram support if you had any problems. And I know one of my guys went right over there. They walked him completely through it. Everything was great.
Yeah. So, it was a bit frustrating. I mean, majority of people actually went through very smoothly, including myself. I mean, I totally FOMO'd in it when it went to like 4 million in 5 minutes. I thought, shit, I better get some myself. I definitely didn't get the cheapest price, but that was on offer. But again, it was moving so fast, and I didn't have any problems, but there were some people that did. It was quite a small minority, thankfully. And what it boiled down to, because there was, when you actually, click on deposit and you confirm it, it is a kind of two-stage process, which is fairly standard for the ERC20s. So it was an approve and transfer. So you have to approve your USDC to be sent to the smart contract, and then once and so that's a MetaMask transaction in itself, and then once that clears, it's you approve a transfer, you kind of confirm a transfer, which is the actual transfer of your USDC to the smart contract.
So it's the two
So
steps that threw him off, and I remember it being a
yeah,
little bit caught me a little bit off guard, and I was like, oh, okay, another transaction. I sent it, and everything went through
yeah,
fine.
and it's not uncommon. But what the problem was that when you've got high coupled with high kind of congestion on the ETH network, it actually created a kind of expanded issue than it really was. So sometimes people would just put in normal kind of gas fee, or maybe they'd lowball it, and therefore it would take a very long time for that first transaction to go through. They would click off and think, oh, it'll
It's done.
kind of correct, it'll sort itself out. I'll check back on it later. They come back and they'd see that it's finally confirmed after 15 minutes or whatever, and they couldn't see their bump. And all they had done was confirm the approval of your
Got
transfer. So what we did was we instigated a quick hot fix, which really on the page that you have, we explain what you need to anticipate. Do try to put in a high gas fee. That's always kind of recommended, just to push it through quickly so that you're not wasting time, because the price is obviously going up with TVL and everything. And so that kind of alleviated pretty much all. We jumped on support. Sam was talking very much directly with people in Telegram.
Mm-hmm.
I was certainly on emails, dealing with things, creating processes. We did up a step-by-step process to really confirm to make sure and redirect people to make sure that you did do this. And people who did inquire, then I certainly let them know that they only kind of went through and they'll need to do it again or whatever. So it was a little bit unfortunate. In terms of moving forward, though, we're currently finalizing the withdrawal contract so that on October 14, people who want to withdraw can withdraw and swap. And so it's all that kind of part of the pre-sale side of things. The UI will have a little bit of a change. So you'll see kind of abilities to buy and stuff a bit more geared towards pre-sale as well. And we've implemented what's called a permit function, which basically puts that two-stage process down to a one-step process. So it'll be simple, confirm your MetaMask as per normal, and that's it. So that should all make it much simpler. And also, if you're going to withdraw anyway, there's no approve and transfer kind of process anyway. So to actually withdraw was always going to be just a single step process.
Perfect. Well, for those in the audience that haven't seen my previous interviews with Jonathan, you might want to check those out and get his perspective as well. And those interviews really actually helped me understand at a deeper level what Bumper was about. And that's when I really discovered exactly how bullish I was on it. So see for yourself. Obviously, this isn't financial advice. I'm just a crypto investor myself, a crypto investor that started a YouTube channel to share with you what helped me go from thousands of dollars to literally millions of dollars over the past 3 years. Now, I've been in crypto for 4 years. The reason I say the past 3 years, because the first year I was chock full of mistakes. I was around the late end of 2017. I watched my portfolio go from 15,000 to 165,000, all the way down to 3,000, because there was no Bumper protocol. I didn't know about taking profits. I learned the hard way about taking profits by not doing it, watching my portfolio absolutely get wrecked. And it's like, I'm not going to do that again. Now, a lot of my friends that started back then, they totally just left the space. I'm stubborn enough to know, and I've been investing long enough to know you buy when it's cheap, right? So I stuck around, bought when it's cheap. It's worked out really well. But I share with you the principles because when I was new, I didn't know how to tell a bad project from a mediocre project from a good project. I could kind of screen the bad ones, but I was buying a lot of mediocre projects. I feel like since that time, I've learned how to kind of analyze projects, and I try to bring you the best of what I see is out there and have projects like Bumper Protocol come on and tell you directly what they're doing so you can make the evaluation for yourself. So if you're ready to level up your crypto game, for life-changing money or wife-changing money or for that Lambo. Now, not the cheap $250,000 Lambo because those depreciate, but the expensive $850,000 Lambo because those actually go up in value. Then strap in because in the coming months, they're going to be hot. And if you haven't subscribed, you might consider, as the principles I share are proven. They help you resist FOMO, resist the urge to panic sell. Right at the very bottom, the system I share with you is the one that helped me go from thousands to millions in just 3 years. And these principles will work for you. Also, you can see the Telegram channel, Crypto Rainn Discussion, or you can follow me on Twitter at Crypto Rainn. I want to thank our special guest. I appreciate, Gareth, you joining us very much.
Yeah, no worries. Thanks for having me, Rainn.
All right. I'm going to send the audience to our rap song for all you Rainmakers. This really reinforces the principles that helped me go from thousands to millions.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, you buy before you're good. Was taught to buy when it was boring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I'll always make the time in mind. I sit the one out cause I'm patient like that. And I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't lead with my heart. The principles are simple, they're leaving a mark. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, go parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Time is never better, but time like the present. This next 5 years is a gift and a feeling like heaven. I'm committed to learn, to study and to know that nothing comes easy but with knowledge to gain show. Sticking at this wrong cause soon will come a bear market. Learning and growing and when it's slow will be the target. Naysayers come out, Bitcoin is dead. The massive decreases can get to your head. I'm sticking around, the time is better. I'm strong like that, I'll let the others be fretters. In 2 years time the bull will bring back the gains. That makes it worth the effort cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go with the hate, let the haters be crapping. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough. And that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck.